Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Now if you like our content, please don't forget to hit the like button. Also, subscribe to our channel and click on the bell button to receive important financial updates at the earliest. In this video, we will be talking about 7 future multi-baggers from Geojit Financial Services and IIFL for the next 2-3 years. Now friends, the way to play this information would be to add these stocks to your watch list and monitor them till the prices come to levels where you think they are attractive. Also, if you are benefited by the content of this channel, please don't forget to share this video because it could also potentially benefit other viewers who may watch it. Please watch this video to know more. Now the first stock on the list by Geojit Financial Services is Intergroup Aviation Limited, which is available at 1290.45 and the symbol for it is INDIGO. Now Intergroup Aviation Limited is engaged in the provision of passenger services. The company is engaged in the business of providing domestic and international scheduled air transport services under the name of Indigo. The company's segments include domestic, which provide air transportation within India, and international, which provides air transportation outside India. The company operates on a low-cost carrier business model. Now the one-year chart would basically reveal that this company has been all over the place. Towards the middle of the year, there was a huge dip, but again, the stock has gone up in sort of an uptrend. The market cap of the company is 49,605.78 crores, which means that the company is a large cap one. The EPS is 66.73 and this translates into a price to earnings ratio of 19.34. Now this is much below the industry PE of 25.94. The book value here is 98.91, which translates into a price to book ratio of 13.05, which is a bit on the higher side. The debt to equity is 1.0507, whereas the dividend yield is decent at 2.63%. The promoter holding here is a very strong factor and it stands at 77.91. The 52-week high for the company is 1357.15, whereas the 52-week low is 1002.00. Now friends, this is a very strong company and has a huge market share. Now the second stock on the list is Nbcc India Limited and this stock is available at 190.40. The symbol for it is Nbcc. Now, Nbcc India Limited, formerly National Buildings Construction Corporation Limited, provides civil engineering construction services. The company operates through 3 segments: project management consultancy, real estate development, and engineering, procurement, and construction. Now, you would see that this stock was on an uptrend for the major part of the year, but at a certain point in time, the stock tipped over and has been on a consistent downtrend ever since. The market cap of the company is 17,136.00 crores, which means that the company is a mid-cap one. The EPS is 4.07, translating into an expensive price to earnings ratio of 46.78. Now this is also expensive compared to the industry PE of 38.64. The book value is 18.60, translating into a price to book ratio of 10.24. The dividend yield for the company is 0.86, whereas the promoter holding is very strong at 74.50. The 52-week high for the company is 291.30, whereas the 52-week low is 170.10. Now friends, this company is owned by the Government of India and hence it is at the forefront of all the infrastructural activities which are currently going on. And this company would tend to exponentially benefit from the same. Now the third and final company from the list is Bharat Electronics Limited, which is available at 141.45 and the symbol for it is BEL. Now Bharat Electronics Limited is engaged in design, manufacture and supply of electronic products, systems for the defense requirements as well as for non-defense markets. The company's principal products/services include weapon systems, radar and fire control systems and also communication systems. Now the one-year chart would reveal that this company was on a slow uptrend for the major part of the year, but in this recent market fall, this company has substantially corrected. The market cap of the company is 34,754.13 crores, which means that the company is a large cap one. The EPS is 6.64, translating into a price to earnings ratio of 21.30, which is much below the industry PE of 23.02. The book value is 30.56, translating into a price to book ratio of 4.63. The dividend yield provided to the company is 1.59%, whereas the promoter holding here is strong at 66.72. The 52-week high for the company is 193.40, whereas the 52-week low is 138.05. Now friends, this is a very niche player and there is a limited competition to this particular company from other companies which may operate in its space. Now when we start the stocks by IIFL, please remember that Nbcc was also recommended by them. So Nbcc was recommended by both Geojit as well as IIFL. So moving on, the first stock from IIFL is Itc Limited and it's currently available at 255.50. The symbol for it is ITC. Now Itc Limited is a holding company which is engaged in the marketing of fast moving consumer goods. The company operates through 4 segments: FMCG, hotels, paperboards, paper and packaging, and also the agri-business. Now the 1-year chart reveals that this company has been an underperformer and has literally closed the year below where it started it. The market cap of the company is 311,819.73 crores, which means that it's a mega cap. The EPS is 8.98, translating into a price to earnings ratio of 28.45, which is below the industry PE of 30.87. The book value here is 37.16, translating into a price to book ratio of 6.88. The dividend yield is 1.86, whereas the 52-week high is 367.70. The 52-week low for the company is 250.00. Now the next company on the list is Steel Authority of India Limited, which is available at Rs 70.20 and the symbol for it is SAIL. Now Steel Authority of India Limited is a holding company. The company is engaged in the manufacturing of flat products such as hot rolled coils, HR plates, cold rolled coils, pipes and electric sheets. It's also involved with long products such as thermomechanically treated TMT bars and wire rods. Now the 1-year chart would reveal that till about the half of the year the company was not doing anything but then went on an uptrend. But of late in the recent market correction, this has also substantially corrected. The market cap of the company is 28,996.29 crores, which means that the company is a large cap one. The company is not yet profitable and hence the EPS and the price to earnings ratio here is not applicable. The company operates in an industry where the industry PE is 20.36. The book value here is 87.18, which means that the company is available at a price to book ratio of 0.81. Now generally the metric to determine it is that if the price to book is below 1, it's considered to be a good figure. The dividend yield is not applicable here as the company did not pay out any dividends and the promoter holding is pretty strong at 75%. Now the important thing to say here is the promoter is the government of India. The 52-week high for the company is 101.45, whereas the 52-week low is 52.85. Now the next company on the list is Rural Electrification Corporation Limited, which is available at 124.70 and the symbol for it is REC Ltd. Now Rural Electrification Corporation Limited is engaged in credit granting. The company provides finance to power sector. It finances and promotes rural electrification projects all over the country. It provides financial assistance to state electricity boards, state government departments and rural electric cooperatives for rural electrification projects as are sponsored by them. Now the 1-year chart reveals that this company has been a wealth destroyer and has been on a consistent downtrend. The market cap of the company is 24,627.23 crores, which means that this company is a large cap one. The EPS is 25.98, which means that the company is available at very cheap valuations of 4.80 PE, and this is also much cheaper compared to the industry PE of 7.61. The book value for this stock is 168.74, whereas the price to book ratio is thus at 0.74. Now this again is available at less than price to book ratio of 1, and that is a good sign. The company has also got a very good dividend yield of 7.74% and the promoter holding here is decent at 58.86%. The 52-week high is 223.90, whereas the 52-week low for the company is 120.75. Now friends, just remember that this company may also get affected by NPAs, so we need to keep this in mind while we analyze this stock. Now the final company on the list is ICICI Prudential Life Insurance Company, and this is available at 388.60. The symbol for it is ICICI PRULI. Now ICICI Prudential Life Insurance Company is a life insurance company which operates as a joint venture between ICICI Bank Limited and Prudential Corporation Holdings Limited. The company provides life insurance, pensions and health insurance to individuals and groups. It conducts business in participating, non-participating and unit-linked lines of businesses. Now the one-year chart shows that this company is literally closing the year at the same level it started it and has not done much for the entire year. The market cap of the company is 55,783.32 crores, which means that this company is a large cap one. The EPS is 11.76, which translates into a price to earnings ratio of 33.04, which is much below the industry PE of 60.53. The book value is 44.56, which translates into a price to book ratio of 8.72. The company is debt free and hence the debt to equity here is 0. The dividend yield provided to the company is 0.99, whereas the promoter holding here is very strong at 80.72. The 52-week high for the company is 509.40, whereas the 52-week low for the company is 363.20. Now friends, please don't consider any of what has been discussed here to be stock recommendations. Please go ahead and do your own research. If you are benefited by the content of this channel, please don't forget to share this video. Also, if you have not yet subscribed to this channel, please consider doing so. Friends, finally, a disclaimer that we wanted to make. We also have a good amount of shares for Nbcc, ICICI Prudential Life Insurance Company and Intergroup Aviation in our portfolios, and hence this was a disclaimer from our part. Thanks for watching this video and we will be seeing you soon with another video.